Imagine this. You're staring at your screen, or maybe your monthly statement. The numbers twitch. A stock you believed in is down 20%. A crypto you thought was the future has vanished. An investment you held for years suddenly crashes. You know, you shouldn't panic sell, but your finger moves. Click. You tell yourself it's logic, but it's not. Moments later, the market reverses. You've locked in a loss. Again. Or maybe you're on the other side. You've been saving diligently, but you're too afraid to invest, watching from the sidelines as the market hits new highs. Your cash sits there, slowly eaten by inflation, while opportunities pass by. Why does this keep happening? You have the knowledge. You've read the books. You've studied the strategies. You've seen others succeed. But somehow, at the exact moment it matters most, something inside you takes over. You blame the market. You blame the Fed. You blame manipulation. But what if the real enemy isn't out there? What if the market isn't your opponent? Your psychology is? And not just any psychology. You're about to meet the 15 ghosts that have been haunting your financial decisions since the day you made your first investment. Ancient programs, invisible possessions, silent wealth destroyers. These aren't just mistakes. They're not random errors or bad luck. What you're experiencing are the ghosts in your neural machine. Ancient programs written millions of years ago, still running in the background of your mind. They were designed to keep you alive on the African savanna. Now they're keeping you poor in the modern markets. Today, we're going to perform an exorcism. We're going to expose these ghosts, understand their origins, and banish them from your financial life forever. Because until you confront these specters, they will haunt every investment decision you make. Section 1. The market isn't your opponent. Your psychology is. In 1998, long-term capital management collapsed. Run by 2 Nobel Prize winners, staffed by math PhDs from MIT, average IQ above 150. They lost $4.6 billion in 5 weeks. That's $920 million evaporating every single week, enough to buy 1,140 average American homes, gone per week. Not because they lacked intelligence, not because their models were wrong, but because when markets turned chaotic, their minds, those brilliant, sophisticated minds, reverted to something ancient: fear, panic, desperation. The ghosts took control. A Stanford neuroscience study scanned traders' brains during live trading. What lit up wasn't the logical cortex. It was the amygdala, the same region that fires when you're being chased by a predator. You see, Price didn't beat those geniuses. Their own nervous systems did. The first ghost had revealed itself. The ghost of primal fear. This isn't a metaphor. It's measurable. When you see your portfolio spike, your neural circuitry releases the same chemicals triggered by cocaine use, proven by fMRI studies at Cambridge. When your investment goes red, your body floods with cortisol, the identical stress hormone released during physical danger. Your mind doesn't know you're looking at numbers on a screen. It thinks you're fighting for survival. And here's the twist. The smarter you are, the more vulnerable you become. The Dunning-Kruger effect in finance shows that expertise breeds overconfidence. Confidence breeds larger positions. And larger positions, in the hands of an emotional mind, become weapons of self-destruction. But here's the first glimpse of hope. Recognizing this is already the beginning of your transformation. Once you see how your brain operates, you can start to outsmart it. If you've ever felt your own neural patterns betray you with money, whether trading, investing, or even just managing your savings, comment "ghost" below. Trust me, you're not alone in this fight against these ancient specters. So if you've ever wondered why your paper trades are perfect, but your real trades turn into chaos, why you can analyze a company perfectly but panic when you buy it, why you know you should invest but can't pull the trigger, it's not your fault, it's biology. And unless you understand the code, you'll keep repeating the pattern. This video exposes 15 neural traps destroying your wealth, 15 ghosts in your machine, based on decades of neuroscience research from Harvard, MIT, and Cambridge. Not strategies, not tips, but the operating system that runs every financial decision you make. Because once you see the wiring, you can rewire it. Once you know the enemy, you can defeat it. Once you identify the ghosts, you can exorcise them. Price doesn't beat investors. Psychology does. Let's begin the exorcism. Section 2. The smart money myth. The ghost of intellectual pride. You think you're smart. You solve complex problems at work. you make data-driven decisions, you've been successful in your career, maybe even admired for how logical you are. So naturally, when you approach the markets, whether day trading or long-term investing, you expect that same brilliance to apply. But then the numbers don't add up. The results don't reflect your intelligence. And instead of profits, you get confusion and losses. This is the smart money myth, and it's the second ghost in your machine, the ghost of intellectual pride. October 1998, Long-Term Capital Management's boardroom. John Meriwether looks around the table. 2 Nobel laureates, 5 PhDs, combined IQ over 1,000. How did we lose everything, he asks. The answer wasn't in their models, it was in their mirrors. A recent UC Berkeley study tracked 3,000 retail investors over 6 years. Finding: the more education they had, the worse they performed. High school grads, down 3.7% annual returns. College grads, down 6.2% annual returns. Advanced degrees, down 11.4% annual returns. Let that sink in. Advanced degrees lost 11.4% annually. On a $100,000 portfolio, that's like setting fire to 11,400 every single year. Over a decade, you've burned a house. That's the price of being too smart for your own good. Not because education is bad, because intelligence becomes identity, and identity refuses to be wrong. Here's a joke Wall Street tells. What's the difference between a genius and a market? The market doesn't care that you're a genius. Finally, some humor in this heavy stuff, right? But this trap doesn't just catch active traders. Think about the PhD who's been waiting for the correction since 2015, sitting in cash while the market doubled. Or the engineer who builds complex spreadsheets to time the market, missing years of compound growth. They're so smart, they've outsmarted themselves out of wealth. The opposite of the smart money ghost isn't stupidity. It's the humble learner's mind. A mind that values being profitable over being right. Every loss isn't a blow to your ego. It's tuition for your education. Nick Leeson destroyed Barings Bank in 1995. Cambridge graduate, star trader. Never wrong. When his positions turned, he didn't close them. He hid them, doubled them, leveraged them. $1. $3 billion loss. 233-year-old bank, gone. His last diary entry: I couldn't admit I wasn't as smart as they thought. The neuroscience is brutal. fMRI scans show that when intelligent people are proven wrong, the anterior cingulate cortex, the error detection system, actually shuts down more than in average IQ subjects. Smart minds are literally worse at admitting mistakes. Be honest, has your intelligence ever been your worst enemy in investing? Type guilty if you've been haunted by the ghost of intellectual pride. Ray Dalio built Bridgewater on the opposite principle. I'm not smart. The collective is smart. Every decision goes through challenge. Every idea faces opposition. Result: $150 billion under management. Meanwhile, John Bogle built Vanguard on an even simpler principle. Don't try to outsmart the market. Just own it. His index funds were mocked as settling for average. Today they manage $7 trillion. So here's where it gets interesting. The market is the ultimate democracy. It doesn't check your diploma. It checks your discipline. And until you can say, I don't know as easily as I'm right, your intelligence is a liability, not an asset. But recognizing this ghost is your first victory. The moment you stop needing to be the smartest person in the room, you can start being the wealthiest. But wait, there's more. Your neural wiring isn't just lying about your intelligence. It's dealing you a drug more addictive than anything on the street. Time to meet the third ghost. Section 3, Dopamine, the false prophet. The ghost of chemical addiction. You think you're chasing profits, but what if you're actually chasing a drug? Not metaphorically, literally. This is the third ghost in your machine, the ghost of chemical addiction. Cambridge University, 2010. Researchers scanned the brains of active traders during live sessions. The results are disturbing. When traders anticipate profit, their nucleus accumbens, the reward center, lights up identically to cocaine addicts getting their fix. But here's the shocking part. When they actually make money, the mind goes quiet, almost disappointed. Because dopamine doesn't reward success. It rewards the possibility of success. And possibility is addictive. This explains not just day trading addiction, but why people check their portfolios 50 times a day, why they can't stick to their monthly investment plan, why they constantly tinker with their 401k allocations. They're not investing. They're feeding a chemical dependency. The GameStop phenomenon of 2021 was dopamine at scale. Millions of retail traders, locked at home during COVID, discovered options trading. The subreddit r Wall Street Bets grew from 1 million to 10 million members in weeks. Diamond hands, they screamed. To the moon, they promised. What they didn't say, suicide hotline posts increased 100x when the crash came. Because when you're high on possibility, reality hits like withdrawal. Let me tell you what happened to me in March 2020. COVID crash, markets down 30%, I saw opportunity everywhere. I wasn't even checking my analysis anymore, just clicking, buying, chasing every bounce. My heart raced with each trade, not because I was scared, because I was high. In 72 hours, I placed more trades than I had in the previous 6 months. Most of them lost. Not because the setups were bad, but because I wasn't investing anymore. I was feeding an addiction. The ghost had taken control. Here's what neuroscience tells us. A study on Parkinson's patients reveals the dark side of dopamine. These patients, given dopamine agonists for treatment, suddenly developed gambling addictions at 800% higher rates. They didn't become bad people. Their reward systems got hijacked. Same drug, same effect, different delivery method. In investing, that delivery method is your screen. Your portfolio app is a casino, and every ticker is a slot machine. Every notification is a dealer saying one more hand. Every YouTube guru promising the next 10x stock is feeding your addiction. The antidote to the chemical ghost? It's not excitement. It's boredom. Profitable boredom. Olympic archer Lim Dong-hyun has won 3 gold medals. He's also legally blind. 20/200 vision. How does he hit targets he can barely see? I don't aim for the excitement of hitting the bullseye, he says. I aim for the boredom of perfect form. Boredom, the opposite of dopamine, the enemy of excitement, the foundation of excellence. The best investors are boring. Warren Buffett reads annual reports for fun. Charlie Munger sits in a chair and thinks. They're not checking prices every hour. They're not seeking thrills. They found a way to make patience profitable. Next time you feel that rush, that tingle before checking your portfolio, that certainty about the next big thing, that urge to make a move, stop, breathe. Ask yourself, am I executing a strategy or am I chasing a high? Because dopamine is a liar. It promises fulfillment. It delivers addiction. But here's the good news. Once you recognize the chemical con game, you can choose boring. And boring, as we'll see, is where the real money is made. And this brings us to something even more insidious. When yesterday's high becomes today's prison. When one ghost isn't enough, your mind creates another. Section 4, the regret loop, the ghost of what could have been. February 24th, 2021. Bitcoin crashes from $58,000 to $45,000 in hours. A software engineer in San Francisco watches his screen. He'd been waiting for this dip for months. His plan was clear. Buy at $46,000. The price hits $45,500, $45,200, $45,000. He freezes. What if it drops more? He waits. 24 hours later, Bitcoin at $52,000, then $55,000, then $60,000, then an all-time high of $69,000. He never bought. But here's where it gets dangerous. For the next 3 months, every financial decision he made was poisoned by that ghost. He bought tops because I won't miss again. He sold bottoms because what if this is another February 24th? He wasn't investing in Bitcoin anymore. He was trading his regret. This is the 4th ghost, the ghost of what could have been. Or maybe your ghost is different. Maybe you're the one who didn't buy Amazon in 2001 because it's just a bookstore. Or you sold Apple in 2012 after Steve Jobs died. For years, every investment decision is an apology for that one mistake. You're not managing a portfolio. You're managing regret. If you've ever had a financial decision haunt you for weeks, a trade, an investment, even a purchase, comment haunted below. No judgment. We all have these ghosts. Harvard Business School studied this phenomenon. They tracked 50,000 retail investors for 5 years. The finding, investors who missed a significant opportunity we're 73% more likely to make impulsive decisions in the following month. This is your mind on regret. MRI scans show that regret activates the same regions as physical pain. The anterior cingulate cortex lights up. Your body literally hurts. And just like physical pain, your neural patterns desperately seek relief. But here's the cruel irony. The decisions you make to fix regret almost always create more regret. It's a neurological loop, a psychological prison, a ghost that breeds more ghosts. Jesse Livermore knew this, the legendary trader who made and lost fortunes repeatedly. In his memoirs, he wrote, "The memory of my first big loss haunted every trade for a decade. I wasn't trading cotton or steel anymore. I was trading against a phantom." He made $100 million in 1929, lost it all by 1934. The money wasn't the problem, the mental scar tissue was. In behavioral economics, they call it counterfactual thinking. Your mind creates alternate realities. If only I had, I should have. Why didn't I? Olympic researchers discovered something fascinating. Bronze medalists are happier than silver medalists. Why? Silver medalists think, I almost won gold. Bronze medalists think, I almost won nothing. Same achievement gap. Opposite emotional frame. The opposite of the regret ghost isn't forgetting. It's the forward-focused mind. A mind that extracts lessons without carrying emotional baggage. Every missed opportunity becomes wisdom, not a wound. Here's my confession. In 2017, I watched Ethereum go from $8 to $400. I had done the research at 10. I knew the technology, I believed in it. I never bought. For the next 2 years, every crypto investment I made was an apology to that mistake. I bought garbage coins. I chased pumps. I FOMO'd into scams. Not because I believed in them, because I was trying to heal a wound that math can't fix. The plot twist is coming. Navy SEALs have a saying, the only easy day was yesterday. They don't mean yesterday was actually easy. They mean yesterday is over, dead, irrelevant to today's mission. Every morning, they do what's called a mental reset. Acknowledge what happened, extract the lesson, release the emotion, focus forward. Try this today. Write down your biggest financial regret, then write, I learned this lesson, I release the rest. Put it somewhere you'll see it daily. Because regret is just your mind's way of pretending the past is still alive. But it's not. You can't profit from shadows. And you're playing today's game with yesterday's scoreboard. Next time you feel that familiar ache, that I should have burning in your chest, say out loud, that opportunity is dead. This moment is alive. Because the market doesn't care about your regrets. It only responds to what you do now. And once you stop investing against yesterday's phantoms, you make room for today's opportunities. But here's your first major breakthrough. You've now recognized 4 major ghosts. That awareness alone has already started rewiring your brain. You're becoming conscious of the invisible forces that have been controlling your wealth. But now for the unexpected twist. What happens when it's not pain that haunts you, but pleasure? Section 5, the high of the win and breathing moment. The ghost of past glory, March 10th, 2000. The NASDAQ hits 5,732. A 24-year-old day trader in New York has turned $50,000 into $800,000 in 18 months. His friends call him the Oracle of Long Island. He starts a blog, How I Beat the Market. He gives seminars at local hotels. His girlfriend thinks he's a genius. His mom brags to neighbors. He thinks the gods of trading have chosen him. Spoiler alert, they haven't. The 5th ghost has possessed him. The ghost of past glory. March 10th, 2001. The NASDAQ is at 2,052. His account shows $12,000. He deletes the blog, changes his phone number, moves back with his parents. Mom stops bragging. What happened wasn't just financial loss. It was the dark side of winning. Or think about the investor who bought Tesla at $50 and rode it to $1,000. They didn't feel smart. They felt like a prophet. Started telling everyone at parties they were the next Warren Buffett, then poured their life savings into the next Tesla, a speculative penny stock, and lost it all. The problem wasn't the win. It was the story they told themselves about it. Harvard neuroscientists discovered something disturbing. A big win floods your mind with more dopamine than cocaine. But unlike drugs, which your system recognizes as foreign, financial wins feel earned, deserved, repeatable. Your neural circuitry doesn't just want more, it expects more. The ancient Greeks had a word, hubris, the pride that comes before the fall. They believed the gods punished it. Turns out, neurochemistry handles the punishment just fine. I learned this in 2021, caught the AMC squeeze perfectly. $12.72s turned 5Ks into 30K in 3 days. I didn't feel lucky, I felt chosen. Started sizing up every trade, taking screenshots of profits, giving friends tips. 2 months later, I gave it all back, plus another 10K. Because I wasn't investing anymore, I was trying to recreate a feeling that was never sustainable. The ghost of that one perfect trade possessed every decision. Even great investors fall for this. Bill Ackman made $2.6 billion betting against markets in March 2020, felt invincible, then lost $400 million on Netflix in just 3 months. The win had made him overconfident. Even billionaires aren't immune to this ghost. The opposite of the glory ghost isn't humility. It's the steady builder's mind. A mind that sees wins as data points, not destiny. Every success is just one step on a longer journey, not proof of divinity. Okay, let's pause for a second. Take a breath. We've covered a lot of heavy stuff. Your mind haunted by 5 different ghosts, each one hijacking your wealth in its own insidious way. If you're feeling a bit overwhelmed, that's normal. Your neurons are probably doing gymnastics right now trying to process all this. Quick recap of our ghosts so far. The ghost of primal fear, your ancient survival instincts. The ghost of intellectual pride, your ego disguised as intelligence. The ghost of chemical addiction, your dopamine dependency. The ghost of what could have been, your regret loop. The ghost of past glory, your addiction to winning. The good news? Awareness is the first step to exorcism, and you're already 5 ghosts in. Each specter you recognize is a specter that loses its power over your wealth. You're literally performing a neural cleansing right now, just by understanding these patterns. Ready to meet more of these ancient programs? Let's continue the exorcism. Section 6, the confirmation echo chamber, the ghost of selective blindness. You think you're doing research, you think you're analyzing both sides. But in reality, your mind is playing a trick. You're not searching for truth, you're searching for agreement. This is the 6th ghost, the ghost of selective blindness. January 2022. A retail investor buys Tesla at $200. Kathy Wood says it's going to $3,000. The stock immediately goes red. What does he Google? Tesla bull case 2022. Why Tesla is undervalued? Tesla $3,000 price target. What doesn't he search? Tesla bear case, TSLA overvalued, competition threat to Tesla. 6 months later, Tesla is at $620. He's still holding, still searching for bull cases, still bleeding, still possessed by the ghost that only lets him see what he wants to see. This isn't just about individual stocks. Think about the real estate investor in 2007 who only read articles about why housing never goes down. Or the crypto enthusiast who only follows influencers who confirm their bias. They're not researching, they're recruiting cheerleaders for their mistakes. Recent MIT research analyzed 1.2 million investment-related searches. Finding, 89% of queries were confirmation-seeking. People don't look for information, they look for validation. Your mind is like that friend who always agrees with you, feels good, helps nothing, feeds the ghost. During the 2008 crisis, this phenomenon had a name, Paulson's loneliness. John Paulson, who made $4 billion betting against mortgages, said, "The hardest part wasn't the analysis. It was that nobody agreed. Every expert, every model, every colleague said I was wrong. I had to build a mental fortress against the echo chamber." He was right. Everyone else was in the chamber. Everyone else was possessed. I fell for this with Peloton in 2021. Bought it $145 because pandemic winner. When it dropped to $100, I found a Seeking Alpha article. Peloton is a steal under $150s, at $80, once-in-a-lifetime opportunity, at $60, short squeeze incoming. At $40, I finally asked, what bear case am I avoiding? Turns out, all of them. People were going back to gyms, competition was fierce, demand was saturated. Every bear had been screaming this. I just had my fingers in my ears. The ghost had made me deaf to dissent. Quick question for you. What's the last time you actively searched for reasons your favorite investment might fail? If you can't remember, that's the ghost protecting itself. Type seeking truth if you're ready to see both sides. The opposite of the selective blindness. Ghost isn't pessimism, it's the complete vision mind, a mind that actively seeks disconfirming evidence. Every bull case gets matched with bear research. Every thesis gets stress tested. The solution comes from science labs. Researchers must try to disprove their hypothesis, not prove it, disprove it. Karl Popper called it falsification. Charlie Munger calls it inversion. Ray Dalio calls it thoughtful disagreement. Different names, same exorcism ritual. Your new research protocol. Make your bull case. Spend equal time finding the bear case. List 3 ways this investment dies. Only proceed if you still like the risk on reward. Try this with your next investment. Before you buy, write down 3 reasons it could fail. If you can't find 3, you haven't researched enough. The ghost is still controlling your vision because the market rewards objectivity, not loyalty. And the echo chamber? It's where good money goes to die. It's where ghosts thrive in darkness. But here's hope. The moment you start seeking disagreement instead of agreement, you join an elite club. The investors who make money consistently aren't the ones who are always right. They're the ones willing to consider they might be wrong. Now, here's where things get personal. When your investments become your identity, every loss becomes an attack, and personal gets expensive. Section 7, the ego portfolio, the ghost of false identity. You are not your portfolio, but try telling your brain that. Stanford psychologists call it identity fusion. When your self-worth merges with your financial performance, you're no longer a person who invests. You are your investments. This is the 7th ghost, the ghost of false identity. Brain scans reveal something terrifying. When people with fused identities face criticism of their financial choices, the same regions activate as when experiencing physical attack. The anterior insula fires, heart rate spikes, cortisol floods the system. Your mental machinery literally cannot tell the difference between your investment was wrong and you are worthless. This doesn't just destroy day traders. Think about the tech worker whose identity is tied to their company's stock, the real estate investor who calls themselves a property mogul after one good flip, the crypto investor who puts laser eyes on their Twitter profile, the index fund investor who looks down on everyone else as gamblers. They're not managing money, they're defending identity. They're protecting the ghost's possession. This killed Lehman Brothers, not subprime mortgages. Ego. Dick Fuld, the CEO, was called the gorilla for his aggressive style. For 14 years, he was right. Lehman's stock rose 500%. His identity became the man who never loses. When mortgage markets turned in 2007, he had chances to sell. Goldman Sachs survived by admitting mistakes early, but Fuld couldn't. Because selling meant admitting the gorilla was wrong. And if the gorilla was wrong, who was Dick Fuld? He held. He leveraged more. He fought reality. September 15, 2008. Lehman declares the largest bankruptcy in U.S. history. $600 billion vanished. Because one man couldn't separate his ego from his positions. Because the ghost had become his identity. The opposite of the false identity ghost isn't having no ego. It's the learning investor's identity. You're not your wins or losses. You're the one who learns from both. Your worth isn't your returns. It's your ability to evolve. I see this in retail investing every day. The programmer who must predict crypto because I understand technology. The doctor who overleverages because I don't make mistakes. The MBA who can't buy index funds because I'm smarter than average. Muhammad Ali understood this. Before fights, he'd shout, "I am the greatest." But his trainer, Angelo Dundee, revealed the secret. After fights, win or lose, Ali would say quietly, "I did my best. Tomorrow I'll do better." The public ego was theater. The private mind was free. No ghost could possess what didn't attach. Here's the neuroscience. UCLA researchers found that people who use distant self-talk show 23% better decision-making under pressure, 31% less emotional activation, 47% better adherence to investment plans. John needs to rebalance his portfolio beats. I need to rebalance. Because distance exercises the identity ghost. Try this experiment. Next time you check your portfolio, say, "These positions are hypotheses. They will be tested. They may be wrong. That's data, not identity." Write it down. I am not my investments. I am the one who learns from them. Because your worth isn't measured in returns or percentages. It's measured in your ability to see clearly when everyone else is blinded by ego, including yourself. The path forward is clear. When you stop needing your investments to prove you're smart, you can finally let them make you wealthy. When the ghost of false identity releases its grip, real growth begins. But this brings us to another illusion, one that's even harder to see through. When your mind plays accountant and cooks the books. Section 8. Mental Accounting, Madness and Breathings, Moment. The Ghost of Creative Mathematics. Here's a fun experiment. You find $100 on the street, you get a $100 tax refund. You save $100 by skipping dinners out. Your investment gains $100. Same $100, right? Your neural wiring. Absolutely not. This is the 8th ghost, the ghost of creative mathematics. Found money? Let's gamble. Tax refund? Free money? Spend it? Saved money? That's sacred, don't touch. Investment gain? Just paper profits, ignore it. Your mind is basically running 4 different accounting departments, and none of them talk to each other. It's like having multiple personality disorder, but for money. Each personality possessed by its own financial ghost. Behavioral economists at University of Chicago proved this. They gave people $50 in 2 ways. Group A, you won $50. Group B, you earned $50. Group A gambled 76% of it. Group B gambled 23%. Same money, different story. Completely different behavior. The ghost whispers different lies based on the source. This mental accounting affects every financial decision. People who won't realize investment losses because it's not a loss until you sell. People who splurge bonuses but hoard salary. People who take huge risks with house money in their trading account but won't invest their savings. People who pay 18% credit card interest while keeping money in 1% savings for security. That last one, that's paying $1,800 yearly to lose $900 to inflation. The ghost has convinced them they're being safe while robbing them blind. March 2009. Warren Buffett is buying everything. Bank of America, Goldman Sachs, GE. A reporter asks, "Aren't you worried about losing money?" Buffett, "It's all the same money. Whether I made it yesterday or 50 years ago, a dollar is a dollar." That's why he's Buffett. And we're not. He's ghost-free. We're possessed. I learned this the stupid way in crypto. 2017. Made $50K on Ethereum, felt like free money. Put it all into altcoins. It's just profits, I told myself. 2018. Those altcoins went down 95%. That's $47,500 vanished. Suddenly that free money felt very real, because it was. It was always real. My mental patterns just didn't want to admit it. The ghost had convinced me some dollars matter less than others. Here's the mental accounting madness in investing. I'm playing with house money, equals I'm about to do something stupid. I need to make back my losses, equals I'm about to do something stupider. This is just my fun account, equals I'm about to blow it up. I can't sell at a loss, equals I'm about to make it worse. The opposite of the creative mathematics ghost, it's the unified capital mind. All money is your money, period. Every dollar deserves equal respect and strategic deployment. The fix is annoyingly simple. All money is your money, all of it, every penny. Warren Buffett doesn't have house money. Ray Dalio doesn't have free money. They have capital, period. Here's a mental reset. Add up all your money, checking, savings, investments, even the $20 in your wallet. That's your net worth. Every dollar deserves the same respect, regardless of where it came from. So next time you catch yourself saying, "It's just profits. It's only a small position. It's separate from my main funds," stop. Slap yourself. Gently. And remember, your mind's accounting system is creative fiction. The market's accounting system is cold math. Guess which one wins? The ghost wants you to play games with categories. Reality only counts totals. All right, let's pause again. 8 ghosts identified, and you're probably starting to see the pattern. These aren't random quirks. They're systematic possessions. Ancient programs that once helped our ancestors survive, but now sabotage our wealth. Quick check-in. Which ghost has cost you the most money? Take a breath. This awareness alone is already beginning the exorcism process. Every specter you recognize is a specter that loses its grip on your wealth. Ready to see how deep the possession goes? Let's explore what happens when you stop thinking for yourself entirely. Section 9. The Social Contagion, The Ghost of the Herd, January 28, 2021, 9:30 a.m., Robinhood restricts buying on GameStop. Within minutes, Reddit explodes, Twitter goes nuclear, Discord channels scream betrayal. But watch what happens next. Millions of individual investors suddenly move as one organism. Hold, they chant. Buy the dip. We're not selling. By 4 p.m., GameStop is up 68%. Not because of fundamentals, not because of analysis, because 10 million minds synchronized into a single emotional frequency. This is the ninth ghost, the ghost of the herd. And it's not new. Yale neuroscientist Dr. Molly Crockett studies emotional contagion. When you see someone panic, your mirror neurons fire as if you are panicking. You don't choose this. It happens in 200 milliseconds. Faster than conscious thought, faster than any defense. The ghost jumps from mind to mind like a virus. The 1929 crash, the dot-com bubble, the 2008 crisis, every Bitcoin surge. They're not just financial events. They're possession events, mass hauntings. MIT researchers recently analyzed 1.8 million retail investment decisions during social events. 76% of trades deviated from users' normal patterns. 83% showed increased position sizes. 91% resulted in below-average returns. The crowd didn't make them stupid. It made them synchronized. It made them all dance to the same ghostly tune. But here's the key difference between social confirmation and social contagion. Confirmation bias. You actively seek agreement. Social contagion. You passively absorb emotion. One you choose, the other chooses you. One is a ghost you invite. The other possesses you without permission. I learned this the hard way in 2013, Bitcoin's first major run. I wasn't even interested in crypto, but my investing chat room was obsessed. Every morning, Bitcoin up 20%. Every afternoon, who's still not in? I held out for weeks. Logic said it was overextended, but isolation hurts. The ghost feeds on FOMO. At 970 I bought. At 1,240 it peaked. At 500 I sold. I didn't lose to the market. I lost to the ancient human need to belong. I lost to possession by proxy. Be real with me. When was the last time FOMO made you break your investment rules? If you've ever bought because everyone else was buying, type herd below. The opposite of the herd ghost isn't isolation. It's the independent thinker's shield. You can be aware of the crowd without being controlled by it. You observe the herd, but walk your own path. Special forces use stress inoculation. Expose soldiers to fear in controlled settings. Train them to recognize emotional contagion. Build mental firewalls against group psychology. Investing requires the same defense, your contagion circuit breaker. Before any investment, ask, would I buy this if I'd never heard anyone else mention it? If you feel urgent, wait 48 hours. Urgency is usually contagion. Unfollow anyone who makes you feel FOMO. Your feed shapes your greed. Because when you invest inside the crowd, you get crowd results. And the crowd's favorite destination? The slaughterhouse. Your mirror neurons don't know the difference between wisdom and panic. They just copy what's loud. And in markets, fear is always louder than facts. But here's empowerment. Once you know about emotional contagion, you can build immunity. The loneliest investment is often the right one. When you can stand apart from the herd, you can see where it's headed. Section 10. The Time Perception Trap. The Ghost of Distorted Memory. March 23, 2020. S&P 500 hits the COVID bottom, 2,237. Every headline screams apocalypse, depression incoming, markets may never recover. Fast forward 12 months. S&P 500, 4,000. Same reporters now writing, the unstoppable bull market. Stocks only go up. Same market, same journalists, same minds. Completely opposite predictions. Why? Because your neural wiring is a terrible historian. This is the 10th ghost. The ghost of distorted memory. Princeton neuroscientist Dr. Uri Hassan discovered, when recalling events, the mind doesn't retrieve memories like files. It reconstructs them based on current emotions. If you're fearful now, past crashes feel more severe. If you're euphoric now, past rallies feel inevitable. The ghost rewrites history to match your current possession. This trap catches everyone. The investor who's been waiting for a crash since 2015, missing 100% gains. The trader who sells every rally because 2008 scarred them. The millennial who won't invest because they graduated in 2009. The retiree who went all cash in March 2020 and missed the recovery. They're not trading today's market. They're trading their trauma. They're investing based on a ghost's false memories. Studies at Duke University show events from the last 3 months feel 5x more relevant than events from 2 years ago. The mind assigns 73% higher probability to patterns that just happened. If the market crashed yesterday, your brain thinks it'll crash today. If it rallied yesterday, it'll rally forever. The ghost has no long-term memory, only recent terror or euphoria. Jesse Livermore understood this. It was never my thinking that made the big money. It always was my sitting, because sitting requires ignoring the ghost's whispers about what just happened. Here's a challenge. Name one market rule from 5 years ago that still works today. The opposite of the distorted memory ghost, it's the historical perspective mind. A mind that weighs all data equally, not just what happened last week. It sees patterns across decades, not days. The antidote. Before major decisions, look at 20-year charts, not 20-day. Write down why you're investing. Read it when scared. Remember, the 4 most dangerous words in investing are, this time, it's different. Because your mind will always overweight the fresh and forget the distant. The market has no memory. Only you do, and that memory is possessed by a ghost that lies. Section 11. The money scripts you inherited. The ghost of ancestral trauma. Weimar, Germany. A wheelbarrow of cash to buy bread. Children playing with stacks of worthless bills. An entire generation watches their life savings evaporate. Their great-grandchildren, now living worldwide, still keep gold hidden, still distrust banks, still fear inflation above all else. They've never experienced hyperinflation, but they inherited the fear. They inherited the ghost. This is the 11th specter, the ghost of ancestral trauma. This is epigenetics in action. Mount Sinai researchers discovered that trauma changes gene expression. These changes pass to children and grandchildren, not just psychology, biology. Your relationship with money began before you were born. The ghost was waiting in your DNA. Dr. Brad Klontz studied 422 adults' financial behavior. He found 7 money scripts, unconscious beliefs that drive decisions. Money is evil, or money is good. Money is scarce, or money is abundant. Money equals safety, or money equals freedom. Rich people are greedy, or rich people are generous. I don't deserve wealth, or I'm destined for wealth. Money requires sacrifice, or money comes easily. Money defines worth, or money is just a tool. 90% of participants were unaware they held these beliefs. Yet their investing patterns perfectly matched their scripts. The ghosts had been directing them all along. Your money script doesn't just affect trading, it determines whether you ask for raises, how you save for retirement, if you'll ever feel secure regardless of net worth, whether you teach your kids abundance or scarcity, whether you pass on the ghost or exorcise it. A person with a money is scarce script will hoard cash and savings earning 0.1% while inflation eats it alive. They think they're being safe, but they're guaranteeing loss. The ghost convinces them poverty is prudent. Silicon Valley entrepreneur Patrick Collison noticed. First-generation wealth creators take massive risks. Second generation preserves carefully. Third generation often loses it all. Each generation inherits different scripts, different ghosts. Your DNA came with financial phantoms. What money ghost did you inherit? If your first thought about money involves your parents' stress, arguments, or fear, type inherited below. You're not alone in this possession. The opposite of the ancestral ghost isn't rebellion. It's the conscious wealth mind. You acknowledge what you inherited, then consciously choose what to keep and what to release. Here's my inherited ghost. My parents were refugees, lost everything, twice. Their lesson, never get too comfortable. For years, I sabotaged every winning streak. Hit 50K? Better pull out half. I wasn't investing. I was rehearsing inherited fear. I was performing my parents' trauma with my money. Breaking free requires 3 steps. Identification. Write your earliest money memory. What emotions attached? That's your root ghost. Challenge. Ask, is this belief helping or hurting? Is it mine or inherited? Do I want to pass this to my children? Rewrite, create new evidence. Small wins against old patterns. Exercise through action. Try this exercise. Complete this sentence. Money is... Whatever comes up first is your inherited ghost speaking. Now ask, is this voice helping me build wealth? Because until you know whose ghost is whispering sell, you'll never know if it's wisdom or a specter from another generation. Section 12. Decision fatigue and breathing moment. The ghost of depleted will. August 25th, 2011. Steve Jobs resigns as Apple CEO. The tech world mourns a visionary, but insiders knew something else. The man who revolutionized computing made exactly one decision each morning: what to eat for breakfast. The answer? Nothing. Same for lunch, dinner, a small salad. Not an eating disorder. A decision preservation strategy. A defense against the 12th ghost. The ghost of depleted will. Because Steve Jobs understood what neuroscience now proves. You have a finite daily supply of good decisions. Use them on breakfast, lose them for business. Dr. Roy Baumeister's landmark study tracked 1,100 parole decisions. Prisoners who appeared before judges early. 70% parole rate. Same prisoners, same crimes, appearing after lunch. 10% rate. The judges weren't biased. They were depleted. They were possessed by exhaustion. This is your neural system on decision fatigue. Glucose drops in the prefrontal cortex. Default mode network takes over. Complex choices become coin flips. The ghost takes the wheel when you're too tired to drive. This isn't just about day trading. Think about the person managing their own 401k who spends hours researching 500 funds, gets overwhelmed and puts everything in cash. The investor who checks their portfolio 50 times a day, each check draining mental energy. The couple arguing about money every night, making worse decisions each time. Each decision feeds the ghost. Each choice depletes your defenses. I learned this running a prop trading desk. Best traders all had one trait. They front-loaded their day. 7 a.m., research and planning. 8 a.m., best setups identified. 9:30 a.m., core positions entered. 10:30 a.m., done for the day. The rookies traded all day. More screen time equals more opportunity, they said. Their P&L said otherwise. The ghost owned their afternoons. Count how many financial decisions you made yesterday. Checking prices, reading news, thinking about moves. More than 10. The ghost is draining your mental capital. Comment your number below. The opposite of the depleted will ghost? It's the systematic investor's mind. Decisions are pre-made, rules are automated, mental energy is preserved for what matters. Your decision preservation protocol, decision budget. 3 investment decisions max per week. 1 portfolio review per month. Check prices once daily, max. Simplification. Automate everything possible. Same investment routine. Boring portfolios equals better returns. Because in investing, stamina isn't about doing more. It's about deciding less. It's about starving the ghost of opportunities to possess you. Time to breathe. We're 12 ghosts deep, and if you're feeling a bit overwhelmed, good. That discomfort is your mind resisting the exorcism. So far, we've uncovered an entire pantheon of possessions: chemical addictions, ancestral traumas, herd infections, memory distortions. These aren't just psychological quirks. They're systematic hauntings that have been stealing your wealth for years. But here's the plot twist. Every ghost you recognize is a ghost that loses its power. You're already different than when you started this video. The simple act of awareness has begun the cleansing process. Let's push forward. The next few ghosts might be the most expensive ones, but remember, knowledge is the antidote. You're building immunity with every revelation. Section 13. The gut lie. The ghost of false intuition. Your gut feeling about money is probably wrong, and that's not an insult. It's neuroscience. This is the 13th ghost, the ghost of false intuition. Dr. Antonio Damasio's research at USC revealed that gut feeling isn't wisdom. It's your enteric nervous system, 500 million neurons in your intestines, more neurons than a dog's brain. This system evolved for one purpose: detecting immediate physical threats, tiger in the grass, poison in the food, stranger from enemy tribe, binary decisions, life or death. Markets aren't binary. Investing isn't life or death, but your gut doesn't know that. The ghost speaks through your intestines. May 6th, 2010. The flash crash. In 36 minutes, the market drops 1,000 points, then recovers. Institutional algorithms kept trading. Retail investors froze or panic sold. 1 trillion evaporated and returned. The difference? Algorithms don't have guts. Algorithms can't be possessed. Your gut is approximately 200,000 years old. Markets are 400 years old. You're using Stone Age hardware for Space Age problems. The ghost is speaking a language from another era. Here's what your gut actually measures. Cortisol levels. That's stress, not market direction. Blood sugar, that's hunger, not opportunity. Serotonin, that's mood, not momentum. Previous trauma, that's fear, not future. I discovered this personally in 2020. Every time volatility spiked, I felt nauseous. Thought it was market intuition. Got a medical checkup instead. Turns out, acid reflux from too much coffee. My trading instincts were literally heartburn. The ghost had convinced me indigestion was insight. This affects every type of investor. The retiree whose gut says, get out. Every time CNN mentions recession. The young investor who feels sick buying their first index fund. The experienced trader who senses a crash coming, usually after bad sushi. Professional poker player Annie Duke explains, amateurs think gut feelings are magical. Pros know they're just unexamined pattern recognition. And most of the patterns are wrong. The opposite of the false intuition ghost, it's the data-driven mind. Real intuition takes 10,000 hours of feedback. Until then, trust systems over sensations. Here's how to calibrate your instincts. The 10-second rule. Feel the gut signal, count to 10. Ask, is this insight or indigestion? The paper trade test. Every gut call, write it down. Track for 30 days. Compare gut versus system performance. Data doesn't lie. Ghosts do. The physical check. Gut screaming? When did you last eat? How's your sleep? Stress levels? Often your market read is just low blood sugar. Try this experiment. Next time your gut says sell everything, write down exactly what you feel physically. Wait 24 hours. Check if the feeling was about markets or your body. Because under pressure, your body lies. Constantly, convincingly. Through a ghost that confuses biology with wisdom. Your gut evolved to spot tigers, not trends. And in markets, confidence without competence isn't intuition. It's just expensive guessing from an ancient ghost. But here's the breakthrough. Once you stop trusting your gut blindly, you can start training it with data. Once you exercise the false intuition, real pattern recognition can develop. Section 14. The Illusion of Certainty. The Ghost of Absolute Knowledge. September 23, 2008. Goldman Sachs, CEO Lloyd Blankfein speaks to Congress. Nobody could have predicted this crisis, he says. September 23, 2007. 1 year earlier. Michael Burry closes his mortgage short for $100 million profit. John Paulson makes $4 billion. Kyle Bass turns $110 million into $4 billion. The difference wasn't intelligence. It was the willingness to say 3 words. I don't know. This is the 14th ghost, the ghost of absolute knowledge. MIT researchers scanned investors' brains during prediction tasks. Discovery. The more certain someone felt, the less accurate they were. Certainty literally blinds you. Blood flow decreases to the anterior cingulate cortex, the brain's error detection system. When you know you're right, your neural patterns stop looking for ways you're wrong. The ghost has convinced you that you're omniscient. This killed FTX in 2022. Sam Bankman-Fried was certain he could never lose. MIT grad, billionaire at 29, expected value calculations for everything. His certainty was so absolute, he bet customer funds. November 2022, 32 billion to zero in 48 hours. The ghost of absolute knowledge doesn't care about your math degree. Ray Dalio built the world's largest hedge fund on uncertainty. His mantra, I know that I don't know. Every Bridgewater meeting starts, what don't we know about this trade? $150 billion under management from institutionalized doubt, from ghost-free thinking. Dr. Philip Tetlock studied 28,000 expert predictions over 20 years. Results. Experts performed worse than random chance. The more confident the expert, the worse their accuracy. TV pundits with highest certainty had lowest success rates. The certainty ghost makes fools of geniuses. The certainty trap catches everyone. The investor, certain tech stocks only go up. The year 2000 laughs. The homeowner, certain real estate never declines. 2008 waves. Hello. The gold bug, certain fiat currency will collapse. Still waiting since 1971. The cash hoarder, certain the next crash is imminent. Missing decades of gains. I learned this the expensive way. 2017 Bitcoin run. At $5,000, I knew it was topping. At $10,000, I knew it would crash. At $15,000, I went short with size. At $20,000, I got liquidated. My certainty cost me 6 figures. The market's uncertainty made others millions. The ghost had whispered, "You're right," while picking my pockets. How many times have you been absolutely certain about an investment, only to be absolutely wrong? If your certainty has ever cost you money, type humble below. The opposite of the certainty ghost isn't confusion. It's the probabilistic mind. Nothing is certain. Everything has odds. Your job is to play the probabilities, not prophecies. George Soros made billions from one insight. I'm fallible. The market is fallible. My fallibility interacting with the market's fallibility creates opportunity. Not, I'm right, everyone's wrong, including me, especially the ghost. Your certainty antidote, confidence intervals. Never say this will happen. Say 60% probability of X, 30% of Y, 10% unknown. Pre-mortem analysis. Before each investment, write, this investment will fail. List 5 ways. If you can't find 5, you're too certain. The ghost is blinding you. The uncertainty journal. Track every sure thing investment. Mark results. Calculate your certainty to accuracy ratio. Reality is humbling. Ghosts hate humility. Try this. Write down your most certain investment belief right now. Then write 3 ways it could be wrong. If you can't find 3, the ghost has you. Mike Tyson's wisdom applies. Everyone has a plan until they get punched in the mouth. In investing, certainty is the plan. The market is the punch. The ghost is what makes you think you won't get hit. And the more certain your plan, the harder the punch. Because the market's edge isn't predicting the future. It's profiting from those who think they can. It's feeding on ghosts who whisper certainties that don't exist. But recognizing uncertainty isn't weakness. It's the beginning of wisdom. The best investors aren't certain. They're prepared. They've exercised the ghost of knowing and embraced the power of probability. Section 15. The action. Bias and the great turning point. The ghost of restless hands. Your portfolio is down 5%. Your mind screams, do something. Sell, buy, rebalance. Anything but sit there. This is the 15th ghost. The ghost of restless hands. And it's the final ghost we need to identify before learning how to banish them all. We've been programmed to believe action equals progress. In prehistoric times, this saved lives. See threat, take action, survive. But in investing, action often equals destruction. The ghost turns productivity into poison. Fidelity studied their best performing accounts. The winners, dead people, second place, people who forgot they had accounts. The best investors literally did nothing and beat everyone trying to be smart. They couldn't be possessed because they weren't present. A UC Davis study tracked 66,565 households' trading patterns. Finding, the average household turned over 75% of their portfolio annually. Cost in reduced returns, 3.8% per year. Over 20 years, they gave up half their potential wealth. Half their wealth sacrificed to the ghost of restless hands. Professional soccer goalkeepers face penalty kicks. Statistics show staying in the center saves more goals. But 94% dive left or right. Why? Because standing still while a ball flies past looks bad. Even when it works. The ghost demands movement, not results. Same in investing. Doing nothing while markets crash feels wrong, even when it's right. Even when stillness is salvation. March 2020, COVID crash. 2 investors, same portfolio. Investor A panics, sells everything, waits for clarity. Investor B does nothing, feels sick, but does nothing. 1 year later, Investor A, still waiting for the right time to get back in, down 30%. Investor B, up 70%. The difference? One acted on fear. One resisted action. One fed the ghost. One starved it. Warren Buffett's Berkshire Hathaway. Average holding period, forever. Number of trades per year, maybe 5. Annual returns, 20% for 50 years. The stock market is a device for transferring money from the impatient to the patient, from the possessed to the free. Your brain hates this. Studies show people prefer painful action over peaceful inaction, wrong decisions over no decisions, busy losses over boring gains. Because evolution rewards action, markets reward patience. And your DNA doesn't know the difference. The ghost doesn't know the difference. The opposite of the restless hands ghost, it's the patient investor's discipline. Activity isn't productivity. Sometimes the most profitable thing you can do is absolutely nothing. Here's your action bias antidote, the 90-day rule. No changes to core holdings for 90 days minimum. Mark your calendar. Feelings aren't valid before then. Ghosts aren't valid ever. The action journal. Every time you want to act, write what I want to do, why I want to do it, what I'll do instead. Nothing. Review monthly. See how much nothing saved you. Automate everything. Dollar cost averaging. Set it, forget it. Rebalancing. Annual, automated. Contributions. Every paycheck, no decisions. The less you touch, the more it grows. The less you act, the less the ghost can possess. Try this challenge. Pick one investment. Promise not to touch it for 6 months. No checking, no tweaking, no improvements. Watch what happens to your returns and your stress. Watch the ghost starve. The great turning point. All right, stop everything, take a deep breath. We've journeyed deep into the darkness. We've exposed 15 ghosts haunting your financial life. We've seen the dopamine addiction, the ego traps, the inherited traumas, the false certainties, the herd possessions. It's ugly, it's overwhelming, and right now, you might feel hopeless. Good, because you have to hit bottom before you can rise. You have to see the enemy clearly before you can defeat it. You have to name the ghosts before you can banish them. For the first 15 sections, we've been in diagnosis mode. We've been mapping the haunting. We've been understanding how these ancient programs have been sabotaging your wealth for years, maybe decades. But diagnosis without cure is cruelty. So here's where everything changes. You've now seen the enemy. You've identified 15 ghosts in your machine. You understand their origins, their methods, their lies. For the rest of this video, we stop diagnosing the disease, and we start forging the weapons to defeat it. We stop exploring the haunting, and we start performing the exorcism. We stop being victims, and we start being victors. The war for your wealth begins now. What you're about to learn isn't just theory. It's a battle-tested system for banishing every ghost we've identified. It's your guide from possession to power, ready to take back control, ready to evict these ancient programs, ready to build wealth with a mind finally free. Then let's begin the exorcism. The 4 pillars of exorcism and your liberation. Welcome to your liberation. You've seen the 15 ghosts. Now you'll learn the 4 pillars of exorcism, your complete system for banishing these possessions forever. Think of these pillars as your ghost hunting toolkit. Pillar 1, the fortress, cold state planning. Pillar 2, the mirror, wealth journaling. Pillar 3, the shield, the power of the pause. Pillar 4, the compass, your systematic approach. Master these 4, and no ghost can possess you again. Section 16, the fortress, cold state planning. November 28, 2018. Jerome Powell says interest rates are just below neutral. Markets rally 600 points. December 19, 2018. Powell raises rates. Markets crash 2,000 points. Every investor scrambling to adjust. Except the ones with cold state plans. They just executed. Their fortress held. This is your first pillar, the fortress of cold state planning. Dr. George Lowenstein coined hot-cold empathy gap. When calm, cold. We can't imagine how we'll act when emotional, hot. When emotional, hot, we can't access our calm wisdom. 2 different brains. Living in one skull. Managing one portfolio. One vulnerable to ghosts, one immune. The U.S. Secret Service knows this. Presidential protection doesn't rely on brave agents making heroic decisions. It relies on boring protocols made in boring rooms. If shots fired, Agent 1 covers POTUS. Agent 2 identifies threat. Agent 3 clears exit. No thinking, no choosing, just execution. No room for ghosts to interfere. Your investment plan needs the same approach. Harvard Medical School studied surgeon performance. Surgeons who use written checklists have 47% fewer errors, not because checklists make them smarter, because checklists make thinking unnecessary, because checklists leave no room for possession. My worst investing year taught me this. 2018, crypto winter. Every day I made brilliant adjustments, lost 70% of my capital. The ghosts feasted on my daily decisions. Same markets, built rigid rules. Only buy on 20% dips from all-time highs. Only sell 25% on doubles, let rest ride. Maximum 5% portfolio per position. If down 10% in a month, no new positions. Recovered everything plus 40%. The market didn't change, my decision-making did. From hot to cold, from possessed to protected. Your hot mind is like a drunk friend at 2 a.m., full of confidence, terrible ideas, and absolutely convinced they can drive. Your cold mind is the designated driver who took the keys away 3 hours ago. Your fortress needs 4 walls. Wall 1, entry rules, written, specific, measurable. Not, buy good companies cheap, but buy when, PE, 15, debt, equity, 0.5, ROE, 15%, price 20% below 52-week high. Ghosts can't argue with numbers. Wall 2, exit laws, non-negotiable. Not, sell when it feels right, but sell 25% at 50% gain, 25% at 100%, trail stop on remainder. Feelings invite ghosts, rules repel them. Wall 3, circuit breakers, automatic stops. Down 10% this month equals no new buys. Down 20% this year equals full strategy review. Any position down 25% equals sell half. Reassess thesis. Circuit breakers are ghost-proof. It's Wall 4, emergency protocols. Write what you'll do in market crash. Buy list ready. Sudden wealth, diversification plan. Job loss, survival budget. FOMO epidemic. Reminder note. Prepared minds can't be possessed. Create your fortress like this. Write it when calm. Saturday morning, coffee in hand. No markets open. Write it by hand first. Makes it stick. Review monthly, update annually. Never change during market hours. Never change when ghosts are whispering. Have you ever broken your own rules in the heat of the moment? If your hot mind has ever overruled your cold mind, type fortress below. Time to build better defenses. Because when the market attacks, you won't rise to the occasion. You'll fall to your preparation. Make sure something's there to catch you. Make sure your fortress stands between you and possession. Section 17. The Mirror, Journaling as Wealth Therapy. Dr. James Pennebaker's breakthrough study. 46 college students write about trauma for 15 minutes daily. 6 months later, 50% fewer doctor visits, better grades, improved immune function. Writing literally changed their biology. This is your second pillar, the mirror of wealth journaling. Investing is trauma at microdoses. Every loss, every missed opportunity, every market crash. Tiny cuts that compound into scar tissue. Tiny possessions that accumulate into hauntings. Without processing, they fester. With journaling, they teach. The mirror shows you which ghosts are speaking. Paul Tudor Jones journals every trade. Ray Dalio documents every principle. Warren Buffett writes annual letters, to himself as much as shareholders. They're not just recording, they're rewiring, they're exercising through examination. Dr. Matthew Lieberman's UCLA research, fMRI scans show that labeling emotions reduces amygdala activity by 50%. Just naming, I feel anxious about this investment, calms the anxiety center. Writing amplifies this effect. 3. Naming the ghost weakens it. Writing about it banishes it. Most investors keep the wrong journal. Wrong, just logging trades. Bought AAPL 150, sold 155. Wrong, vague feelings. Market felt toppy today. Wrong, blaming externally, Fed manipulation. The right journal tracks patterns. Right. Emotion recognition. Felt FOMO, when Jake mentioned his Tesla gains. Ghost of the herd speaking. Right. Body awareness. tight chest before selling winners too early. Ghost of regret activated. Right, belief tracking. Still carrying 2008 trauma about bank stocks. Ghost of ancestral trauma present. Your wealth journaling protocol. Weekly investment review, 10 minutes. Which decisions did I make this week? Which emotions, ghosts influenced them? What patterns am I noticing? What did I learn about my possessions? How will I defend against them next week? Monthly portfolio check-in, 20 minutes. Winners. Why did they work? Which ghost did I resist? Losers. What did I miss? Which ghosts controlled me? Temptations resisted. Which ghosts did I starve? Temptations followed. Which ghosts did I feed? Overall state of mind. Am I more free or more possessed? After major decisions, 5 minutes. Investment. What did I do? Reason. Why did I do it? Feeling. What physical sensations arose? Ghost check. Which specter was speaking? Confidence. 1 to 10. Check back in 90 days. Brett Steenbarger studied 500 profitable investors' journals. Common elements. They track mistakes without self-attack. They identify patterns, not just events. They celebrate discipline, not just profits. They name their ghosts, then defeat them. Try this today. Write 3 sentences. My biggest investing fear is... This fear comes from... Which ghost? One small step to face it is... That's it. You've just started the exorcism process. Your mind journals constantly anyway. It's running stories, creating narratives, building beliefs. But that journal is unconscious, written by ghosts. Written journaling brings it to light, where you can see it, challenge it, change it. Because the story your brain tells in darkness controls every investment you make in daylight. Time to edit your story. Time to use the mirror to see which ghosts are real and which are illusions. Section 18. The Shield. The power of the pause. You see the notification. Breaking, Fed announces emergency rate cut. Your portfolio drops 5% in minutes. Your finger hovers over sell all, stop. This moment, this exact moment, is where wealth is won or lost. Not in the decision you make, but in the space before you make it. This is your third pillar, the shield of the pause. Viktor Frankl, Holocaust survivor, wrote, "Between stimulus and response, there is a space. In that space is our power to choose." He wasn't talking about investing. He was talking about surviving hell. But the principle builds wealth too. The pause is where ghosts lose their power. Your brain processes fear in milliseconds, but wisdom takes seconds. The pause gives wisdom time to wake up. The pause gives ghosts time to dissipate. U.S. military snipers train for this. Before pulling the trigger, inhale fully. Exhale halfway. Pause heartbeat. Only then decide. 2 seconds. The difference between precision and panic. The difference between possessed and free. Morgan Housel tells this story. During the 2008 crash, his coworker put a sticky note on his monitor. "You are not allowed to log into your account today." Simple, stupid, brilliant. That pause saved him from selling at the bottom. That pause was ghost repellent. The pause protocol. Feel the urge to check, trade, panic. Stop. Literally freeze. Breathe. 4 counts in, 6 out. Ask, is this wisdom or worry? Is this me or a ghost? Wait 24 hours minimum. If it's truly urgent after 24 hours, it wasn't emotional. But 95% of the time, the urge vanishes. The ghost starves without immediate action. Ian, I tested this during the March 2020 crash. Set a rule. No portfolio changes for 48 hours after any breaking news. Wanted to sell everything? Waited. Wanted to buy the dip? Waited. Result. Caught the bottom almost perfectly. Not through genius. Through pause. Not through action. Through ghost-starving stillness. Emergency pause techniques. For panic. Right, I am safe. My plan is sound. This too shall pass. No ghost controls me. Read 10 times. For FOMO. Calculate how much you'd invest. Then wait 1 week. Still feel it? Use half the amount. The ghost inflates urgency. For checking addiction, delete apps. Make it harder. Friction creates pause. Friction starves ghosts. Try this now. Set a rule. No investment decisions within 48 hours of major news. Write it down. Stick it on your screen, your shield against possession. Because fortunes aren't lost to bad investments. They're lost to good investments made at bad moments. They're lost when ghosts choose the timing, and the pause is what separates the two. If you've ever made a financial decision you immediately regretted, you know the cost of no pause. Type shield up below if you're ready to build this defense. One pause can save a year's returns. 100 pauses can secure a retirement. A lifetime of pauses? That's mastery. That's freedom from every ghost. Section 19. The compass. Building your system. You started investing for freedom, financial freedom, time freedom, choice freedom. But here's the paradox nobody tells you. The investors with the most freedom follow the most rules. This is your fourth pillar, the compass of systematic investing. They wake up to systems, not decisions. They execute processes, not hunches. They're boring, and boring builds wealth, and boring starves ghosts. Ed Seykota, market wizard. Win or lose, everybody gets what they want out of the market. Most people want excitement. Markets give them poverty. Ghosts give them possession. Some people want wealth. Markets give them systems. Systems give them exorcism. David Swensen took over Yale's endowment in 1985. Built a simple system. Fixed asset allocation. Annual rebalancing. No market timing. No exciting stories. No ghost food. 31 years later, $25 billion growth. Same boring system. Extraordinary results. Ghosts can't possess what doesn't deviate. Without a system, every investment is a question. Should I buy more? Should I sell? Should I wait? Every question drains energy, opens doors for fear, creates space for ghosts. With a system, the rules decide, you just follow. Ghosts have no entry point. Your wealth system. Blueprint Component 1, asset allocation, the foundation. Not some stocks, some bonds, but exactly. 40% U.S. stocks, 20% international stocks, 30% bonds, 10% alternatives. Adjust for your age or size goals, then never deviate. Ghosts feed on flexibility. Starve them with structure. Component 2, investment criteria, the filter. For individual stocks, PE under 20. Revenue growth over 5%. Debt, equity under 0.5. You understand the business, you'd hold for 5 years. All criteria must be met. No exceptions, no ghost whispers. Component 3, rebalancing rules, the discipline. Check quarterly. Rebalance if any asset class drifts 5% plus. Use new money first. Sell winners, buy losers. Feel nothing about it. Let no ghost influence it. Component 4, review schedule, the rhythm. Daily, nothing. Ghosts feast on daily attention. Weekly, nothing. Starve them. Monthly, quick check, 5 minutes max. Quarterly, full review, adjust only if rules demand. Annually, strategy assessment. Evolution, not revolution. The system. Paradox, constraints create freedom. No daily decisions equals mental peace. Clear criteria equals no FOMO ghost. Fixed schedule equals no anxiety ghost. Boring process equals exciting returns. Rigid rules equals flexible life. Warren Buffett's system. Understand the business. Good management. Fair price. Hold forever. 4 rules. $100 billion. 60 years. Too simple for ghosts to manipulate. Build your system like this. Start simple. 3-4 rules it'll max. Write it down. Test for 90 days. Refine based on data. Then stop changing it. Ghosts love complexity. Give them simplicity. Think of your system like a recipe. Would you keep changing ingredients while the cake is baking? No. Trust the process. Starve the ghosts of options. Because freedom in investing doesn't come from infinite choices. It comes from making choice unnecessary. It comes from making possession impossible. Your system is your compass through the fog. Build it strong. Trust it completely. Let it guide you past every ghost. Section 20, your first mission. Trade psychology, not just prices. You've made it. Through 15 ghosts that steal wealth. Through 4 pillars that restore it. You didn't just learn about investing. You learned about possession. You learned about exorcism. You learned about yourself. And now comes the critical moment. Not just understanding these insights, but living them. Because information without implementation is entertainment. And you didn't come here to be entertained. You came here to be liberated. So here's your mission. Step 1. Choose your primary ghost. Here are the 5 most expensive ghosts for most investors. The ghost of primal fear, panic selling. The ghost of chemical addiction, checking constantly. The ghost of what could have been, regret trading. The ghost of the herd, FOMO buying. The ghost of restless hands, overtrading. Which one has cost you the most money? If your ghost isn't here, name it from the 15 we covered. Step 2. Choose your pillar. Match your ghost with its antidote. Fortress for planning-based ghosts. Mirror for emotional ghosts. Shield for urgency ghosts. Compass for process ghosts. Pick the pillar that speaks to your specific possession. Step 3. Commit to 7 days. Just 1 week, track your ghost. Use your pillar. Document what happens. Here's what to expect. Day 1 to 2. Awareness floods in. You see the ghost everywhere. Day 3 to 4. Resistance peaks. The ghost fights back. Day 5 at 6. Something shifts. The possession weakens. Day 7. New neural pathway forms. Freedom tastes sweet. Step 4. Share your commitment. In the comments below, write, "My primary ghost is name. My pillar for 7 days is specific pillar. When I banish this ghost, I'll specific outcome." Real answers only. Specificity creates accountability. Accountability completes exorcism. But here's the real secret. These 7 days aren't the end. They're proof. Proof you can change. Proof ghosts can be banished. Proof you can master your psychology. After 7 days conquering one ghost, you'll have confidence to tackle another, then another, until all 15 ghosts become 15 strengths. That's not a year-long project. That's a lifetime transformation, from possessed investor to psychological master. But this isn't just about your wealth. It's about the financial story you will pass down. Will your children inherit your ghosts, or will they inherit your freedom? The choice you make in the next 7 days doesn't just change your portfolio, it changes your legacy. Will the next generation learn fear from you, or will they learn mastery? Will they inherit poverty patterns or wealth principles? Will they be possessed by the same ghosts, or will they be born free? The work starts now. The exorcism begins today. Remember, everyone wants to beat the market, but the market isn't your enemy. Your untrained psychology is. The ghosts are. Master them, and the market becomes simple. Not easy. Simple. There's a difference. And now, you know it. Your wealth isn't determined by your IQ, your information, your timing, your luck. It's determined by your awareness of the ghosts, your systems to repel them, your patience to starve them, your psychology freed from them. You just upgraded all 4, so what ghost will you banish first? What pillar will you wield? What will change when you succeed? What legacy will you leave? Type exorcism begins below. Then add your ghost name and chosen pillar. No excuses, no delays, no I'll start Monday. The market opened 100 years before you were born. It'll be here 100 years after. But your opportunity to master yourself, that's right now. Your old brain got you here. Your new brain takes you forward. Your freed mind takes you to wealth. Time to invest with your mind wide open. Time to trade without ghosts. Time to build wealth that lasts generations. Welcome to the 1%. Not the wealth 1%. The psychologically free 1%. The wealth part? That's just a matter of time now. The ghosts have been named, the pillars have been raised, the exorcism awaits. Your move.